welcome to Business Morning right here live on Channels Television. Well, before we get into the markets and all the beauty of gains and losses, see Nigeria's corporate community is in mourning following the tragic fire at the Afriland Towers in Lagos, September 16, which claimed the lives of staff members from both the Federal Inland Revenue Service and the United Capital PLC. FIRS confirmed the loss of 4 of its senior staff, while United Capital PLC announced the passing of 6 colleagues. Both organizations have expressed deep grief, extended condolences to the families of the departed, and pledged support as investigations into the cause of the incident continue. Channel CV, our hearts go out to the families and businesses affected by this tragedy, and we stand with all who are grieving the loss of their loved ones. All right, let's get a check on other stories. Now we see Nigeria's stock market advanced by 0.35% on Thursday, adding about 310 billion naira to investors' wealth. As bargain hunting boosted demand for select stocks, including Chelaram, Austin Lars, the Initiate Sovereign Trust Insurance, and Aradol Holdings. Market capitalization rose at about 89.86 trillion naira, while the all-share index climbed 489.45 points to close at 142,036. Despite gains, market breadth closed negative, with more decliners than advancers, led by the likes of losses in some of the in Guinea Insurance, CardinalStone Insurance, and Legend Internet. So that's how your money performed yesterday. To some other stories now, Google, they've unveiled a fresh wave of investments to accelerate Africa's digital transformation, including 4 new subsea cable connectivity hubs, a $9 million fund for universities and research institutions, and free AI Pro subscriptions for students across the continent, building on nearly 2 decades of partnerships in infrastructure, skills and innovation. The tech giant says its latest initiatives are aimed at empowering Africa's next generation, boosting connectivity and unlocking economic opportunities through artificial intelligence. So we have our eyes on that one. In some financial news now, a Nigerian investment firm, CardinalStone Securities, they've been named Africa's best broker 2025 by the prestigious Euromoney Capital Market Awards. The recognition places the Nigerian firm among the continent's top performers and highlights its growing influence in shaping Africa's investment landscape. It comes on the back of CardinalStone's earlier win as Best Equities House in Nigeria at the 2024 Euromoney Securities Houses Awards, proof of its consistency and excellence. For 3 straight years, the firm has ranked as Nigeria's leading stockbroker by both volume and value traded. Between January and August this year alone, it executed transactions worth over 800 billion naira, trading more than 27 billion shares on the Nigerian exchange. The Euromoney Awards celebrate innovation, client focus, and leadership across global markets. Industry watchers say CardinalStone's latest win reflects not just its strong track record, but also resilience of Nigeria's capital markets and a rising profile of African firms internationally. With this recognition, CardinalStone strengthens its reputation as a trusted partner for investor and a key player driving growth and opportunity in Africa's evolving financial markets. All right, let's flip over now to government revenue. A total sum of 2.225 trillion naira that's been shared to the federal, state, and local government councils by the Federation Account Allocation Committee as revenue distribution for August. This amount represents 11.2%, or about 224.11 billion naira increase when compared with the 2.001 trillion naira revenue distributed for July. So there you have the breakdown there. Federal government got 100.93 billion naira. State governments got 336.45 billion, while local governments got 235.51 billion naira there. According to a statement from the Office of the Accountant General of the Federation, the total sum shared for August by the FAC is the largest single month allocation on record. Meanwhile, there's no mention of any excess crude account added in the FAC distribution for last month. The country's ECA balance stood at over $473,000 as in August last year. So we're going to keep track on the ECA, the excess crude account, and hopefully we can get that up at some time. Well, let's get a check on our forex earner now. Oil prices held steady today despite the U.S. Federal Reserve's expected quarter-point rate cut as markets await signs of economic weakness and concerns over persistent oversupply. And we see Brent there, $67.67 a barrel, 0.41% down. WTI, we've been seeing the range trade so far, and that's at $63.73 a barrel, down 0.50%. So that's it. I'm talking about the U.S. Fed now. Fed Chair Jerome Powell reaffirmed the central bank's cautious stance following its latest rate decision, about 25 basis points cut there. They remain focused on sustaining price stability and supporting economic growth. Let's hear now from the Fed Chair.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level.
All right, let's talk to Mr. Bismarck Rouhani, now MD, CEO of Financial Derivatives Company. Good morning, Mr. Rouhani. Great to have you.
Good morning, and thanks for having me this morning.
Fantastic. So it's as expected, I guess, no surprises here, 25 basis points cut. What does this signal, in your view, for the U.S. economy and, talks about the U.S. Fed independence? What's your take on that?
I think the question of Fed independence has been pretty much put aside. We had 12 members in attendance yesterday. 11 of them voted for a 25 basis point cut. And Miran, who is on leave as the chairman of the Council of Economic Advisors, voted for a 50 basis point cut. So there's kind of unanimity. What was also interesting is that the risks that were considered to be elevated were more in the part of employment and jobless claims rather than on inflation, even though inflation is at 2.9, which is a touch higher than what it was in the previous month. Also, the guidance is that there will be 2 more cuts this year. Probably, that is 25 plus 25. So in all, we'll have 75 basis points cut this year. What is the effect of that? The market had already priced in a 25 basis point cut. And to a large extent, they expected 50 maybe as a surprise. What it means is that now, because that was priced in and the dollar actually appreciated. Normally, when you bring down interest rates, the currency gets weaker. But the dollar actually appreciated against the basket of currencies, generally speaking. We've seen the price of oil, as you just pointed out, actually decline a little bit. And we've seen other commodity prices, global commodity prices actually increase. So there was no surprise, no problems. All we saw was that the disruption expected because of Miss Lisa Cook, or Professor Lisa Cook, being asked not to participate, but she didn't participate because the courts have allowed her to participate and to continue for a long time. So as far as the Fed is concerned, and the independence and autonomy of the Federal Reserve Bank is pretty much intact, and we expect no surprises between now and the end of the year. For us, the price of oil at $67 is good. I think our production, that Nigeria's production, is slightly lower, but almost close to the quota levels, the OPEC quota levels. And all things being equal, we expect no major shocks as a result of this Federal Reserve meeting and the outcome. No surprises, no shocks, and therefore stability in the global markets for now.
How do you think, U.S. businesses and households, are likely to feel the impact? How do you think they'll feel the impact of this rate cut in the short term?
No, what has happened is that you heard the Federal Reserve saying that consumer spending had declined, and also the level of investment. So there are three major risks that are being evaluated by markets. One is the problem of tariffs and counter tariffs. That is one item. The second one is the question of consumer spending and elevated level of activities which could lead to higher inflation. And the third being the fact that unemployment numbers. So if you look at it, as far as the Fed is concerned, the most potent risk right now is unemployment, because if unemployment or if the jobs market is not solid, then consumption reduces. And if consumption reduces, then you'll have investment reduce. So basically that's it. But having said that, we've seen the stock market in the US actually rally to record levels, because most of the risks that were discussed earlier on were probably exaggerated. So once the market knows, like you said, you buy on the rumor and sell on the news, the market already knew and prices in, and therefore we do not expect any significant changes. All we expect to see between now and the end of the year is slightly lower oil prices. This will also mean mortgage. You see, the most important thing for the U.S. consumers is that because of interest rates have come down by 25 bips, we will see their mortgage costs will go down. And if the mortgage cost goes down in the U.S., it means that consumers will have more to spend on consumer goods. And we are going to that last quarter of the year where Christmas spending and all the holiday spending comes on. We have Thanksgiving. First of all, we have Halloween, Thanksgiving, and then Christmas. So these are three very important months as far as the US economy is concerned. And also, to all intents and purposes, the global economy will also respond to that.
So, Mr. Ronnie, so we have the first cut now this year. We have gold still trading near all-time highs. We have a forecast from Deutsche Bank that gold will hit $4,000. We're seeing what's playing out with the US dollar. So far the stock market is still rising. Is this a perfect storm for something that we don't know yet and retail should actually be paying attention to, retail investors?
I do not think so. I think that the what I call the shock absorbers in the system are pretty much institutionalized. We do not expect any major surprises. Therefore, all the surprises that were anticipated are pretty much exaggerated, and I think we should be looking at stability. Now, having said that, it's important to note that gold is trading at about $3,400. The target that it will go to $4,000 an ounce is, according to Deutsche Bank, I do not believe that that's going to happen. That would mean that there's a significant, maybe a 20% drop in the value of the dollar, which will make the price of gold to increase. So we don't expect that to happen. What is more likely to happen, therefore, is that if there's some kind of settlement, some type of structural settlement in Ukraine, which brings down the price of oil somewhat, maybe to about, let's say, $60 or $62, then it begins to have a direct impact on what we in Nigeria and emerging markets begin to have to deal with. But at $62, $63 a barrel, if that happens, now let's bring it home to Nigeria. It means that, one, the price of refined petroleum products will decline, but also our revenue decline. You just mentioned now that we had 2.2 trillion naira shared among all tiers of government for the August revenue allocation. With a drop of maybe 2, 3, 4% in the price of oil and production remaining at about 1.7 million barrels, we will see a major hit to our revenue, which means that the federal government of Nigeria and the state governments will have to borrow more to fund the budget. If they borrow more, then you will find that we expect the Central Bank of Nigeria at a meeting next week to follow suit with the Federal Reserve and other banks. We just had Ghana cut by more than expected yesterday. So we expect that to happen, and therefore the cost of borrowing of the federal and state governments will come down marginally. And that will be an interesting element for fiscal deficit management in Nigeria. So that's why I said, yes, the Fed in the US, the global markets are one thing, but the interconnectedness between global markets and Nigerian policy and market activity has never been more integrated than now.
All right, I'm talking about interconnectivity at this point. Next week, the MPC will also be making the decision. Does this decision make it easier for other central banks, this latest cut from the US?
Yes, it is, because it was well anticipated. Some people thought that it would go by 50 basis points, but now it's 25. And they've given guidance for what's going to happen between now and the end of the year. So pretty much the price of oil, the value of the dollar and all of that is going to be in a horizontal trading range. When you see that, you look at Nigerian inflation has come down to 20.12, while US inflation has increased. At the same time, US interest rates have come down by 25 bips. Let us assume, for the sake of argument, that Nigeria brings down its rates by 25 bips from 27.5 to 27.25. You will see that the interest rate inflation differential is in favor of Nigeria. Therefore, two things will happen. One, the Naira will not weaken in the foreign exchange market because of a reduction in interest rates. Probably copy what has happened in the US. That is, you bring down interest rates by 25 bips and the Naira strengthens. Two is that the cost of borrowing by the government, right, the cost of debt service will come down, and then Nigeria will be able to actually probably raise additional money. As you may know, the South African government is retired $2 billion of bonds and is going to the market to tap that again to raise their borrowing. So they use $2 billion of their reserves to pay off their debt and are raising another $2 billion to replenish that. So if that is happening to South Africa, which is not an oil-producing country, Nigeria has the benefits of this. And then we now pivot back into what's going to happen domestically. A couple of things: the Dangote refinery and the trucks are on the road. I think that's pretty much resolved. So we are going to be having uniform pricing of petroleum products across the country. We are going to have free distribution of petroleum products with the CNG trucks, thousands of them put in by the Dangote refinery and the petrochemical complex. And also, we are going to be seeing massive exports of fertilizers from the Dangote refinery, which is a game changer. So when you take that on one hand, and you take the investment Nigeria is trying to make on power supply refinancing, both at the GenCo's level and also at the DISCO level, we might begin to see some kind of equilibrium in the power supply situation. Therefore, if we see generation capacity increase somewhat, that could portend well for growth numbers in 2026. But for now, everything remains stable as far as Nigeria is concerned to the end of the year.
Fantastic. And I'm wondering if this adds to the positivity for the dirty December we're expecting, somewhat.
No, the December is going to be quite interesting this year. Like we said, it's December to a power of 3. Dirty December.
Right.
So we expect that. But also, if you look at domestic commodity prices, which is interesting, we carried out a market survey yesterday and we found out most of the products, most of the commodities we saw are actually staying flat and others declining. The most interesting, the one that dropped sharply is Gari, that came down to 25,000 naira. And that's interesting. Tomatoes also dropped by 7% to 70,000 naira. And yam tubers also dropped by 25% to 9,000, because this is the time for the yam festivals. And rice stayed flat at 80,000 naira. So this is end of September. We're going into October. We think that harvest is kind of shortly, but we will also see that if you look at the inflation numbers that came out, key areas where inflation actually declined the most were Oyo and Ekiti states, as well as Kano state. Now, why are those states facing this kind of inflation trend? It's because most of those guys were shifted from domestic commodities and planting cocoa. And cocoa, the price of cocoa is now at $7,200 a ton, which means that the guys in those areas are actually making more money, and that is making the demand for commodities in that area and inflation generally higher. So that's an interesting development. But generally speaking, we expect inflation to taper downwards next month again, and then we'll see how it goes. But generally speaking, the inflation trajectory shows some moderation, just like the rest of Africa, and most of the issues that the inflation stoking factors are actually easing at this point. We've seen money supply growth taper. Right. We've seen also the exchange rate appreciating. So I think that covers what the expectations are for the next month or so.
Fantastic. All right, Mr. Ronnie, thank you so much. That's a good place to anchor it. Mr. Bismarck Ronnie, CEO, Managing Director, Financial Derivatives Company. Thank you so much for coming on the show, sir.
Thank you for having me.
Nigeria's economic growth has long been tied to its infrastructure story, from power supply, transport networks to elevators, cranes, and industrial machinery. The backbone of development lies in engineering solutions. Yet the country continues to face a huge infrastructure gap. Indigenous firms play a critical role in bridging this gap by creating jobs and driving technology transfer. Well, today we explore how local engineering companies can thrive, compete globally, and help Nigeria unlock its industrial future. Joining us for this conversation, we have engineer Didier Olufalobi, the MD Cresta Laurel Limited. Joining me right here in the studio. It's great to have you, sir. Good morning.
Good morning, Ladi. How are you today?
I'm fine. The U.S. just cut rates. Markets are looking good. At this point, everyone's feeling that euphoria, right now, even though there's still some uncertainty, but I'm fine, sir. But, when I have, incredible CEOs and MDs, like yourself on the show, before we get into the conversation, I'd like to ask a question. Looking at the Nigerian economy, right now, what is keeping you up at night? And what is helping you sleep well when you look at the economy so far?
Okay, thank you very much, Ladi. Good morning, viewers. Keeping me up at night remains the fact that there are still a few challenges in terms of the backbone of the entire economic system. And about sustainability, yes, there are a few highs, but we have to put the structures in place to maintain those highs on a continuous high. And those are not there yet. Yeah, it's work in progress. So I'm still worried that we could still have a crash in the price of oil. We could still have a downturn in the quantity that is produced, So these are major factors that are still very influential. So until we get to a point that the structure in terms of the real sector, the oil sector, the diversification of the economy is such that you don't have an over-dependence on a particular product, then you can give some sigh of relief. So yes, it's looking good, but we are treating it with cautious optimism.
Right, but I'm sure, seeing the stability of the Naira, that helps you sleep for a while now.
Well, yes. After the period of serious uncertainties in the Naira, the value of the Naira, yes, we could say I think it's actually getting better. So, yes, it looks good. But like I said, I'm still cautious.
We're still cautious.
Because we've seen the cyclic nature of the rates and the volatile nature of the rates on a consistent basis for quite some time, that we have to be sure that this is we are really there. But like I always say, until we have a real sector that is fully functional, and so then we can be sure that whatever gains we have are going to be permanent.
Right. All right, let's look at, infrastructure now. Definitely that has been cited as a major issue keeping Nigeria from growing the way we would like to grow, economically and otherwise. From your experience, where are you seeing the major gaps, right now?
Okay, thank you. First, when I look at infrastructure, I know most people limit infrastructure to roads, water, rail. I also look at infrastructure in the healthcare system, infrastructure in the education sector. So I try to expand what I call infrastructure more. Having said that, the challenge has always been the fact that we don't have adequate funding. The rate at which we need to fund compared with the rate at which we are funding, there's a huge gap. Also, unfortunately, the resources are not available to fund as much as we could. So those are the gaps that are there. However, I think one of the biggest challenges we have with infrastructure funding is our legal system. When you have a legal system that does not guarantee justice on time, and I think the government has to work exceedingly hard on ensuring that people are sure of getting justice at the right time, within a short time. People will bring in funds. Nigeria has a very good return on investment. However, there are quite a lot of negatives, like you said, the issue of volatility of the exchange rate and so on. But if we have a legal system that guarantees you justice, a robust system that guarantees you justice, look at what is happening with infra credit. The moment it was introduced, people began to look at investing. So we need to create a robust system that makes people feel secured when they put in their funds.
So that means, regardless of the macro issues, you're still trying to sort out your currency, you're trying to sort out inflation and, bringing in foreign direct investment and all of that. But as long as you set your justice system right, you will attract funds regardless.
Oh, yes. The critical issue for everybody is that if I go into a place that I'm not familiar with and things go wrong, am I secured? That's the best guarantee you can get in your investment is the justice system that works. That's all. There are other challenges. Yes, everywhere in the world there are challenges. There is no country with a perfect system. But if you get a justice system right, that your contract is what the document on which it is printed, and you can go to bed knowing fully well that if anything should go wrong with your investment, you are secured if you are not the cause. Then you can feel, it's a risk. Your risk evaluation is better. That's basically it.
So you don't have to really go out there to go and market your country to try and bring in foreign direct investment. Just sort out
yes.
all of those issues and they'll come running.
Oh yes. I mean, there's nobody who wants to keep funds sitting down, with very little ROI. So everybody wants to look at places where the return is. And we have a good population, we're a growing economy, we're a developing economy. There's so much to do here. And and the moment you put the structure properly in place, people will manage the rest.
All right, so, talking about, funding infrastructure now, the gap, that we've seen so far, over $100 billion needed, $100 billion needed annually for a decade. That's a projection, to close that infrastructure gap in Nigeria. And we've tried I don't know if we've fully utilized it. That's the PPP model, the public-private partnership. Have we fully utilized it, or should we be looking at another model at this point?
Well, let me say that it's growing. A few people went in earlier. They had a lot of challenges. And as such, there was a sort of caution on the part of potential investors. Let's first speak about local partners, not talk of FDI now. So, but I think with the kind of structures and securities being put in place, more and more people are going to go in. It's growing. We are seeing some investment in some major, based on PPP. Yes, it's growing. But the moment it is clear that it is the risk is well evaluated, there are security guarantees in place, I'm sure we're going to get better at it.
All right, let's look at the engineering side of things now. We know definitely when you look at some African countries, they go out there to get loans, from foreign countries to, build infrastructure. Then at the same time, the country that's giving you that loan is going to help you build that infrastructure. So you're going to pay them to help you build that infrastructure. Definitely that model looks like a huge kind of loss. If you're looking at it economically, are you seeing any improvement when it comes to, local engineers actually getting most of these, big gigs, when it comes to, contracts here in the country?
Yeah, I think there are improvements. Local engineers, there is the executive order 5 that is not being fully implemented. But I think that for as long as you go and take the loans from outside, the owners of the funds have their conditions, and you are limited by what you can do, irrespective of whatever your local laws are. So if you need the funds, you get to look at it and weigh the... But what we need to realize is that most of those loans are actually tied down to really big projects, which is actually out of the scope of the Executive Order 5. But having said that, I want to believe that if local companies, first we have little respect for each other. So really, the communication when you are dealing with a local partner is not as encouraging as when they are dealing. So we are on one side, you almost could go cap in hand to beg. With the local partner, it becomes a challenge. But with the companies coming out, I think if there is any idea that we are being shortchanged, it's about us, not about them. Because those projects are happening in some other African countries at better rates. So we need to look at our structure, our projects, management project, contracting structure to be able to ensure that we are not shortchanged. For me, the most important thing is to put the infrastructures in place. And there are different models. One model is going to get a loan. I have always encouraged the build, operate, and transfer model. Because you see, at the end of the day, it is not only infrastructure that we have funding gap in. We have funding gap in education. We have funding gap in health. We have funding gap in food security. We have funding gap in security, all sorts of issues. So we cannot just say because, yes, infrastructure is very important, pump all the funds, take loans, and we don't have time for others, which is what is happening now in most cases, maybe until the past 2 years or thereabout, where things are being more evening out more. So my own position is that we need to look at all the models. One of the models is, like I said, is build, operate, and transfer, whether with local investors or with investors coming from outside. We have what we call bankable projects, and we have the non-bankable projects. So for me, for each bankable project, you must look at it critically and see where you can get an investor who will be willing to come, build infrastructure, operate it, maintain it, based on an agreed period, maybe it's 40 years, whatever it is, so that in that period, other things can thrive.
So looking at indigenous firms, like yours and, others, the markets right now, what kind of conversations are you having, to improve local content, when it comes to Nigeria? We're trying to, push on the whole, Buy Nigeria policy. We need to have started this many, many years ago. That way would have gone really far, by now. We don't have to send out, scarce, for it to, get some of these services and products that we need. We're technically importing a lot of things, right now, especially when it comes to this kind of services. So what kind of conversations are you having to, get the government to actually support indigenous firms, at this time, make sure we're getting more Nigerian-made things? We need to have started many years ago, but I guess we need to start at any point.
Well, the first issue, like you said, is the government. Who are they patronizing? So if the government itself does not take the lead by ensuring that when you go into a government facility, everything there is produced locally, it's going to be difficult to get somebody who has his funds to dictate to him where to put his funds. So first, the government must start, because you see, if you don't patronize local companies, engineering companies, they can't get better. They can't. They need funding, they need resources, they need continuous project flow to be able to retain good staff, to train them properly, and to be able to transfer technology, whatever it is they need to do, so that they can get better. So for as long as, we, as the government is the biggest, what I would call the biggest buyer of goods and services, if they are not patronizing local contractors, local engineering firms, it's going to be difficult for those engineering companies to go. So it's a vicious cycle. So my call is that, and this is the call we are making in the engineering industry, and I'm aware the Nigerian Society of Engineers has been at the front of it, led by the successive presidents. You need to patronize us so that we can get better, we can improve on what we are doing. Of course, there are critical areas, and there's nothing Nigerian engineers have not done, actually, when you look at the history of Nigeria. So you need to patronize us. And the moment the government starts doing that, and people start seeing the results, the private sector is going to jump on board. And that's the, so to break that vicious cycle, the government must make a conscious decision and respect some of the local content policies they put in place. The policy itself is the first step. The implementation of the policies to the letter is what we are now working on and trying to encourage people to move into.
All right, so, talking about, doing things better, smarter, definitely, I want to believe there's some maybe trends you've been noticing, when it comes to engineering in Nigeria. Are we seeing new technology, being applied, to the way, engineers do work here? What are you seeing so far? Really, Nigeria is what I would call technology hungry. Most of what we call the new technologies are here. In the industry I play, the elevator industry, there is nothing available anywhere in the world that we have introduced to Nigeria. And Nigeria, in some cases, it's not we introducing it, it's the industry demanding for them. Whatever you talk about, smart equipment, they are here. Smart buildings are now the in thing, green buildings, they are here. We have certified green buildings now in Nigeria. So whatever you say about new technologies coming in, the only place where we have been a bit slow is in the renewable energy sector, which we hopped on a bit late. And the thing that is missing there is the role of the government. And now the government is waking up to that responsibility because the cost of the capex on renewable energy is very high. So, and if you look at where it was grown fast all over the world, the government created a buffer by subsidizing. And then you can also get carbon credits when you use them. So these are things that now people are now jumping on board, hopping on it. So, but in terms of technology, Nigeria is really, really doing well in the deployment of technology. Right. And, definitely you are a big player, in that sector. And I'm sure there are investors out there, they have cash and they're looking for where to, put that money into. So in your view, where do you think investors are not looking at right now that they should actually be looking? Yeah, quite a lot of, well, I don't know whether to say they are not looking. In engineering where I play, there's still a very, very low traction in respect of manufacturing of engineering tools, engineering equipment locally. That is always because steel is the backbone of engineering manufacturing, and we've not been able to get our steel right. So maybe when we're able to get our steel production right, we're going to move that, cover that gap. But that's one area investors are not looking at. It's capital intensive, which could be another factor. But the reality is that the moment you're able to sort it out and you take off, there's a lot of demand for production in Nigeria. So today, what you see is a lot of importation of very cheap machines, from Asia. And that is not sustainable. There's a big market for it. Those who are doing locally, the investors are not coming in because by the time you want to do it properly, they look at the total cost outlay in terms of having to import the steel. You lost a lot of margin and so on and so forth. So if we get our steel right, I think that is going to work. Again, we also have to look at the cost of finance for manufacturing. So you realize that... Hopefully the interest rates are going to go down with the MPC meeting next week. Hopefully we'll start seeing rate cuts, going forward. If I can put out my neck, I would say they won't change it. Ooh. But let's see how it goes. Yeah, wait and see. I think the current leaders of finance, they are very cautious about, throwing out too much hope too quickly. And I agree with them. So they are doing it step by step. So I think they might not. They might still keep it, hoping that, because the inflation thing they are fighting, they are not there. All right, cautious optimism at this point, but thank you so much. I guess that's a good place to anchor it there. Engineer Dide Olufalobi is the MD, Crestoloro Limited. Thank you so much, sir. Thank you very much for joining us today. Thank you very much. We know the Central Bank of Nigeria conducted its Treasury bills auction for September there across the 91-day, 182-day, and 364-day tenors. Let's drill down on the results now with Caleb Alimi, is a chief dealer at Providence Bank. Great to have you on the show, Caleb.
Thank you, Ladi. Good morning.
Fantastic. So, we had the auction results. We're seeing oversubscription. I believe especially for the 364-day bill. What does it say about investor sentiment and liquidity in the system?
Well, let's start with liquidity. Liquidity has been a lot in the system. I think over the past 1 or 2 weeks, the average liquidity has been around 2 trillion, 1.9 to 2 trillion among the banks and with deposits with CBN. So that has contributed largely to what we're seeing in the market. The market has been expecting a bit of open market operation from the central bank, but we haven't seen that. That hasn't come up yet. And obviously, we know the central bank probably has a plan up their sleeves. And then we're seeing that investors are looking for where to put their money. That's, informs the subscription at this, just concluded NTB auction. 1.4 trillion, in subscription for only the 1 year paper. Of course, the debt management office through CBN sold only about 250 billion of that. They didn't take up all of that. So we can see that 272 billion, I beg your pardon. So we can see that, that there's a lot of appetite because, investors are looking for where to, deploy these funds to. But of course, there's still that, like your last guest said, there's the cautious optimism looking out for a proper direction from the CBN.
So why do you think the shorter term 91-day, 182-day tenors, why do you think they attracted less subscription?
We often see that. We often see very little subscription for those two tenors, largely because, people are after yield. The longer you hold fixed income securities for, the better your yield return is. So that's why we see a lot of interest in that 1 year paper.
So with stop rates, ranging between 15 and about 16.78%, what do these levels indicate about, government borrowing costs, in today's environment?
The government continues to borrow cheaper and cheaper, given what we know about the deficit in the budget. We should think they should be borrowing more at this point. But currently, this is what they have an appetite for cheaper borrowing. And we can see that. Look at what has happened. They've cut the 1 year borrowing rates, dropped almost 100 basis points, 91 basis points specifically from 17.69 to 16.78. We can see that these guys want to borrow, but they want to borrow cheaply and as cheaply as possible. We also expect that we'll see a similar trend in the bond auction that should happen next week.
All right, definitely. I love me some, cheap credit. But, for retail and institutional investors, what strategies, make sense right now, given the current NTB yields?
What we find is that this provides an opportunity for corporate borrowers. The federal government, which is risk-free, looks to borrow as cheaply as possible. But then corporate borrowers, blue chip companies that approach the market through commercial papers, companies that approach banks for loans can always reference this 1 year NTB to say, look, the rates are lower. So definitely borrowing costs across the economy should also generally be lower. And then we should see that credit sort of extend to real sector at a lower cost. I think the benefit is for the real sector borrowers, really.
All right, so we had the Fed, the first cut, interest rate cut there in the U.S. Any impact for Nigeria's fixed income market? What should investors be looking at?
So what we think would happen, what we see would happen is there should be a bit of yield pickup for Nigerians. We should see foreign investors, looking for that aggressive yield, looking for better returns to come to Nigeria. So we could see more competition for yields in Nigeria. We could see, yield compression in this market space. Well, we're already seeing that play out in the Eurobond space. The yields in Eurobond space have continued to, trend lower based on this cut. The cut has already been priced and market expected 25 basis point cuts, which is in line with market expectations. So we've seen yield compress on the Eurobond space. We think that is part of what we're seeing in the local fixed income market as well. And then we think more of it is going to happen.
And, looking ahead for the rest of the year, what trends are you expecting in the fixed income market? We're hearing that with rate cuts, expected, from the MPC here in Nigeria, money is going to move over more to the equities market. Is that what you're seeing?
Oh, definitely. Definitely, that's what we expect. Look at where the one-year yield is. It's somewhere around the 19%. And the stock market has done over 60% this year already. I'm sure some particular papers, some particular securities have done 150%, 200%, and all of that. So we do think investors will move to the equity market, especially as we approach the end of the year, to enjoy that decent yield. I think that the equities market is poised for greater gains.
Right. We'll definitely keep our eyes on that. And are you expecting a cut by MPC next week?
I also shared the last. Guest
engineer follow
position.
Yeah.
Yes, I share his position as well. I think the MPC, they could cut, but I would also think they should wait out for a bit to consolidate the exchange rate gains we're seeing. Once there's a cut, based on the cuts in the US, we expect more FPIs to come to Nigeria for that yield pickup and all of that. So I think they should hold on, and not cut just yet. Or if they could cut, maybe a very small cut.
Maybe 25 basis points or less than 25?
Yeah, something like that. Maybe no, 25 basis points is the least they should do. Yeah. So that small cut, should actually, that could, the market won't see it as anything big, but I mean, it could just signal that, okay, the easing cycle is commencing from their contractionary monetary policy stance.
And definitely, I want to believe the MPC would also consider inflation rates. That's been slowing at about 20.12%. That's the last one.
20.12, yeah.
20.12.
It's very encouraging.
Real interest rates, real returns at this point.
The inflation data is actually very encouraging, but I think they should wait for a bit to see it further consolidate. But I mean, the last three inflation readings have actually come down. So I think that could also serve for them to say, look, those also support their reason for a cut or market's expectation for a cut. But I think it would be good for them to just wait and let that consolidate for a bit, and then maybe cut at their next meeting, a bumper cut at their next meeting.
Bumper cut. Well, we'll see. We'll keep watching, at this point. Investors, I guess, just trying to get direction now when it comes to interest rates and inflation. Thank you so much. Caleb Alimi, Chief Dealer, Providence Bank. Thank you for coming on today. And have a profitable trade.
Yeah, thanks.
Fantastic.
Cheers.
All right, let's get a check on what's playing out with the global economy. We see in New Zealand that the economy shrank more than expected in the second quarter as weak manufacturing activity, slowing export volumes largely offset the middling growth in private spending. Gross domestic product shrank about 0.9% quarter-on-quarter, according to government data there. The print was weaker than expectations for a 0.3% drop and largely reverse course from a 0.9% increase in a prior quarter. GDP, that shrank 0.6% year-on-year, missing expectations that growth would remain unchanged. GDP had also shrunk about 0.6% in the first quarter. And to the global automobile industry now, Hyundai Motors, they're recalling more than 568,500 Palisade vehicles in the United States due to a safety issue with seatbelt buckles. According to the U.S. National Highway Traffic Safety Administration, the NHTSA announced that the affected vehicles have seatbelt buckles that may fail to latch properly, creating a risk that passengers would not be adequately restrained, during a crash. All right, to the Securities and Exchange now. We see the U.S. SEC Commission. They said that they voted to approve rule changes proposed by 3 major exchanges outlining generic listing standards for new products tracking cryptocurrency and spot commodity prices. The U.S. SEC, they said the exchanges were now allowed to list and trade commodity-based trust shares by meeting newly outlined general requirements, while also slashing the amount of time taken between filing and launching. All right, to some big tech now. See Google and PayPal. They announced a multi-year strategic partnership yesterday focused on advancing commerce solutions across platforms and devices. The collaboration will integrate PayPal's payment solutions throughout various Google products, including PayPal, branded checkout, hyperwallet, and PayPal payouts solutions. PayPal Enterprise Payments will serve as a key payment processor for Google Cloud, Google Ads, and Google Play. Now, we see the Bank of Canada, they cut their interest rate by 25 basis points, and citing softening economic conditions and diminished inflation pressures. The move widely anticipated by analysts. That reduces the overnight rate from 2.75%, with the bank rate at 2.75% and the deposit rate at 2.45%. Governor Tiff Macklem opened the central bank's statement, noting that the Governing Council is proceeding carefully, monitoring how tariff disruptions and trade uncertainty continue to weigh on Canada's export-heavy sectors there. Now we see Goldman Sachs Group Inc., the stock reached a significant milestone, achieving an all-time high, about $793.24. The financial giant now commanding a market capitalization of $250 billion, trades at a PE ratio of 17.31. So definitely that's what's playing out in the global space. All right, just a quick check. What's playing out right now? Live trading right there on the NGX floor. Just 1 basis point advance there. So it's positive, but mildly, positive. We see stocks like Secure Electronic Tech, that's getting attention. Chams, Real Insurance, Champion Brewery, Sterling Bank, Get Insurance, getting all the attention right now from investors. Those are the top trades right there in the terminal. So hopefully you're able to make a profitable trade today. I'll be back at 1:30 to give you updates of what's playing out in the markets that we track. I'm Ladi Williams. We'll be at the team right here at Channels HQ. It's bye for now.